Hi, this is Randy Finney with the right side of the chart, and today is Tuesday, April 14th, 2015. This video I want to do a little bit different than the usual formats. For those of you who have followed the site for some time, you'll notice that typically I'll pick a sort of a focused topic to do a video on, such as the U.S. market overviews, or maybe I'll go take an overview of international stock exchanges, different stock markets around the world, or I'll pick a certain sector that I'm bullish on or bearish, such as the gold mining stocks, and then I'll cover GDX, the sector, and then drill down to some of the components or my top picks. This I want to do a little bit different. It's just more of a broad overview of some of the things that I'm watching now, some of the more important, significant developments in the markets, and then at the end, I'll try to keep this short and then just touch on a few of my top picks for long side candidates. It's obvious that I'm bearish right now on U.S. equities and short U.S. equities, but as I've mentioned, there's been quite a few trade ideas. More and more coming out. I'm finding some attractive long side setups and both U.S. and mostly non-U.S. stocks right now. So, anyways, I'll get to those. What we're looking at here is a 15-minute chart of the Qs. If you look in the upper left-hand corner of the chart, I'll try to move quick on this video, but if I don't mention the time frame, it's up here in the upper left-hand corner. This is the bearish rising wedge overshoot that I talked about. Again, for those of you who followed the site for a while, over the years, I've highlighted these in many cases, both bullish and bearish. This works in reverse. You could have a bullish falling wedge and see a downside break. Those overshoots typically occur when the wedge is getting close to the point where it would break out. That's ideally, and it varies, but usually about 70% towards the apex, or at least when you look at a wedge that's well formed. These overthrows or overshoots, if you get them, they tend to, you have an upside breakout. You see the very impulsive move up. And what that is, at least my assumption of what it is a lot of short covering. Shorts become dejected, realizing, well, the symmetry of this bearish rising wedge pattern has been broken. You'll also have longs that pile into that for the same reason. Well, who wants to buy, prices at the top of the bearish rising wedge pattern, but once the symmetry is broken? So, I don't always look for every upside breakout or busting up of a pattern to play out this way. But in this case, because I've remained firmly bearish on the longer term charts, both looking at the daily and the weekly charts. In fact, the current QQQ short trade was based off the daily time frame, and I'm going to cover that. So that is what yesterday, as this was happening, led me to go ahead and make the post how this very well may turn out to be a overshoot, which it was. And because of that repositioning, once people realize, wow, this bullish breakout and upside break didn't stick, what I assume it to be is a combination of two things. You have the longs that jumped in here. It's somewhat of a bull trap. They must turn around now and cover or sell their positions. And the shorts who were squeezed out in that move probably starting to pile back in. So combination of both, and you have stops being run and everything else. So either way, we've now triggered. As I said yesterday, the first sell signal or add-on would be a move back into the wedge. I said it would be a little bit, or not a little bit, I said it would not be objective to have shorted there. But once we came back in the wedge, yes, it was, because that effectively proved that to be an overshoot. And as I mentioned, prices typically come down impulsively once this happens. And as you can see what happened, we had the initial thrust back into the wedge, nice consolidation, which if you zoom in or just take a look at that, that's flagging action. Anytime you have a bull flag, bullish or bear flag, bearish pennant, any type of consolidation after a strong leg down like that, that is typically a continuation pattern. And as you can see, prices have since broke down. And more importantly, you can see the big red candlestick. I'm doing this video, it's just before 10 a.m. Eastern time. So the markets have been open for a little less than half an hour. You can see that breakdown. And then boom, very impulsive selling. In fact, when the market opened, hard for you to see on this video, this yellow line marks the open. So, I'm sorry, yesterday's close, that's right here. This was the open. We opened right on that line and rallied up strong. And that's because we opened at support. It only makes sense. We had a strong pop, but then look what happened when we came and broke that. Boom, very impulsive selling. You can see it on, that's a 15-minute chart. Here's the open here. There's that pop at the open, and then boom. So pretty impulsive selling. So anyways, let's move on. So that's the 15-minute chart. As I mentioned, these are the sell signals that I like to confirm with, or some of the trend indicators. We had the negative divergence beneath the wedge. We now have the MACD signal line, as I talked about, which is the 9 EMA. Once that crosses below the 0 line, that is a very effective buy and sell indicator on the shorter term, this 15-minute time frame. So that has triggered along with the breakdown of the wedge, and I'm just waiting now for this 28.68. I mean, personally, I'm not waiting. I'm pretty darn short at the moment, but that would only help to confirm the longer-term bearish case and more downside to that, that minimum downside target I have on the swing trade of the $100 area. Let's take a quick look at the daily time frame. Now, again, this is what I talk about using multiple time frames. Although a lot of my focus lately has been on that 15-minute chart, I check the daily, the weekly charts all the time. And what happened, coincidentally or not, that overshoot yesterday, I'm zooming into this again. This is a 2-year history right now of the QQQs, and so I'm going to zoom a little forward to cut it down to about a little less than a year. This is the bearish rising wedge pattern on the daily time frame, and so if you really zoomed in, and if I drew a trend line here, this would be that 15-minute bearish rising wedge pattern that I was showing over there. So you can see the overshoot and all that. So let me get rid of that line. So now what I'm going at here is yesterday's overshoot of those 15-minute wedge patterns on the SPY and the Qs. They coincided with a back test of this larger rising wedge pattern. And in trading, shorting a breakdown of a rising wedge pattern is objective, and shorting any retest. And in this case, we happen to have 2 retests. We had one that just came a day or 2 after the original breakdown, or a couple days after, I should say. And then we had that one yesterday, and if you really zoom in, you can see that at the high, that the Qs attempted to pierce it, and actually got back above that trend line, but failed to close there. So when you're trading off the daily time frame, it doesn't matter what happens intraday. It's about these candlestick closes. And in that case, the Qs were rejected on that attempt to regain this bearish rising wedge pattern. So far, they've turned down. So trading 101, I mean, that's a sell signal. If you weren't already short, even if you didn't short the original entry on the Qs, we're still not too far above it. I think that was just under the 108 level. So still very objective entry, very good risk reward because you can place your stop, although I think the official stop on the trade is a 111 level on the QQQ swing trade that was put on about a month ago. You could certainly establish a short position here and place it just over yesterday's highs. That would give you an extremely attractive risk-reward ratio. Minimal downside if you're stopped out, and that could again, my next target, downside target, is $100 area, which is this horizontal resistance around there. And as I'll show here on the weekly chart, I talked about this recently, that currently the charts are what I call or refer to as stacked, meaning it's similar to a domino effect. We have bearish chart patterns and bearish developments on the very short-term time frames. In other words, that 15-minute chart, 60-minute charts, daily chart that I just covered, all the way out here to the weekly chart. Now, right now, the weekly trend is still solidly bullish. We're above this long-term trend line. Most of my momentum or longer-term trend indicators are still on buy signals. However, this is the bull market uptrend line that defines the bull market in the Qs off the 2009 lows. And as you can see, there's several tags. It's a well-defined trend line. Here's that breakdown, intra-week breakdown that we had back in October of 2014, but the Qs managed to come back and close above that trend line, and we've had several touches since. Where I'm going with this is, if my 15-minute scenario plays out in the daily scenario, the QQQ swing short that's going to take us down what I believe to at least the $100 level, well, that will put us well below. That will certainly print a weekly close, if not several, below this long-term uptrend line. This has double divergence at the top, prices making higher highs. double negative divergence in place. So that would be one heck of a longer term sell signal, and that's why T1 is only my first target. And at this time, my preferred target. We'll see what happens. I'll have to look at the charts. I may or may not try to game a bounce off that level if we get there, but I wanted to point out that, if the shorter term trades play out, that will then trigger longer term sell signals. Okay. Enough on that. We'll go through the SPY real quick. 15-minute chart. This was discussed. Similar 15-minute bullish or bearish rising wedge pattern with an overthrow yesterday in the SPY. We have horizontal support here around the 208.70 level. We're just slightly above that as I'm talking. We're at 208.54. You can see this is a live chart. And now boom, there goes that wedge. So there's a sell signal. Trading on the 15-minute time frame, ideally you want to see a 15-minute candlestick close. We're still working on this current 15-minute candlestick, so it's possible we close back above that, but I doubt it. At this point, we've had the overthrow, and as I mentioned yesterday, I expect the selling to just continue to pick up and become pretty impulsive here as people realize we're probably going down further. Sell signal number 2, we do have the EMA fast line crossing below 0, and as you can see here on my on the custom histogram I've created, this is just simply the 2868 EMA pair. They're not shown up here. You can just put the moving averages on your chart and watch for a crossover. My histogram just tells me visually when we get that crossover once that number goes below 0, and you'll see the red bar. So we're almost there, but not there yet. And as I mentioned, I want to see all the U.S. indices. Looking at the tracking ETFs, that would be the IWM, MDY, which are the mid caps, QQQ, and the SPY. When all those give way on these 15-minute charts, it's almost certainly going to confirm the longer term bearish picture. Just like the Qs, this is a daily chart of the SPY. We have a bearish rising wedge pattern on the daily chart. It goes all the way back to the October 14 lows. And just like the Qs, we've been back testing from beneath and have now turned down. So, the next good solid sell signal will come if I put my look at the horizontal line here, roughly the 204.30 area. You can see some nice horizontal support here. Once we go below that, we're probably going a lot lower. So any short-term traders, that's what I'd be targeting on the SPY if you're trading the SPY or the ES or any of those similar derivatives. Okay, weekly chart on the SPY, same story as the Qs. Here's the bull market uptrend line off the 2009 lows. I actually have 2 uptrend lines. We do have these long candlestick shadows from back in October 2011 and October 2014, where we had these big spikes. October is usually a rough month in the markets. And so what I've done is I put this white alternative uptrend line. This upper uptrend line actually has more tags of candlestick tails and or bodies, but because we do have 1, 2, 3 reactions, this white line could, in the S&P, will likely find support on the initial tag of that trend line, but a solid break and weekly close below will more than likely mean there's additional downside to come. So again, any shorts that you're putting on now, keep in mind have the potential to run. So trailing stops, or using wider stops. This might be what I think the best swing short opportunity on the broad markets in literally years now. And again, especially considering from a risk reward perspective, because if wrong, this market has disappointed a lot of short side traders. Your stops can be just above the recent highs on the SPY. So you could short here at, we're above 208, 208 and a quarter right now. Recent highs were around, let's just say call it 213, 214 if it wants to run up for another thrust. And remember, the way the markets work, you almost always have to think like the big boys. They know a lot of people are going to put stops right above the recent highs. So if I see a recent high at 212, my stop's not going to be at 212.01. My stop will be at 213, 214, depending on the downside targets. That allows for one of these little fake brief runs, stop clearing runs that the institutions are so good at doing because they have enough muscle, enough buying power to actually move the markets, at least in the short term, and they can run stops. And boy, if they see a cluster of stops on these shorts set right there at 212, there's a good shot they may make a run at it, clear those stops, turn around, and then position short after they've taken those shares from you. So enough on that. Okay, that's the broad markets. Let's talk about the dollar a little bit because, as I state, the dollar has had and probably will continue to have a big impact on what dollar sensitive commodity or dollar sensitive assets, I should say, such as commodities, such as gold mining stocks, which I remain bullish on, bearish on equities because of this. We've had stock markets been rising with the rising dollar, so we see a reverse of trends, a lot of repositioning here. So this is the 60-minute chart. I've pointed this out recently. There's a trend line. Let's go back. That's a 2-hour chart. Go back to the 60-minute chart. Basically, we came up. This was a bullish falling wedge pattern, one that I'm sure dollar bulls were licking their chomps on, and it broke out to the upside. I would have loved to seen. I thought we'd get one more pullback, but when it broke out, I pointed that out at the time that it did break out, and this was a resistance level that I had here defined by these two gaps, and the dollar, ever so slightly shot above there, but has now gapped down quite impulsively. So what this means to dollar traders, people using the charts, and almost all traders use the charts in some form or to some extent or another. That is now I won't call it a bull trap yet because they're not underwater. This was the breakout right here, but this gap, at least in UUP, dollar trades almost around the clock. You could trade the currencies, but as far as UUP now, we've gapped down. There's a little support here on that horizontal line. But about half the gains from that breakout have been wiped out, and so that's not really healthy or constructive. Price action. It's normal to see a pause, a consolidation, maybe some flagging action, and then an upside break. But at this point, I'm looking at more downside in the dollar. Let's take a look at one other thing. I like to watch the euro. Oops, did that wrong. Euro US dollar pair. Here we go. Just passed it. Okay, euro US dollar. This is a chart I almost put up yesterday. I've been tracking this falling or descending price channel defined by these two white lines, pretty well defined, and we broke out of that, and now very impulsive move up. So this is a bullish breakout of a well-defined price channel, and this is a euro US dollar pair, basically saying the euro is going up against the dollar. So not to digress too much, but I just wanted to point something out on the site last night. For those of you that aren't aware, I recently added a Twitter feed. Now, a lot of the tweets that you see come through here are the post. There's some software set up. Every time a post is made, it is automatically tweeted out in the Twitter feed. So one way to catch up on the site if you've come here, if you're not using an RSS feed reader or you don't want to scroll down on the site, you can just scroll down here and you'll catch every post that's been made. At times, the other day, there was a problem with the web hosting company that serves the site. They went down for a while. I couldn't post a trade idea. The site was down for about 20 minutes or so. So I used the Twitter feed to post this chart, the PWE trade idea, because I felt it was timely, and that stock has gone up since. So again, continue to check this from time to time. If you're not a Twitter user, it's free to register. You can sign up. You can even follow the Twitter feed on a browser. You don't need to use your phone. You can create a Twitter account and then just follow RSOTC. And yesterday I posted this article about, or retweeted this article from the Wall Street Journal. Interesting read. Has to do with the euro and why I think it makes a good point that actually they don't make the point, but the takeaway that I have on this is this race to the bottom, this on the currency wars, is about over in the euro. Because now banks are starting to have to, certain banks over there in Euroland are having to pay customers money if you have a mortgage, because those mortgages, the vast majority of mortgages taken out in recent years were adjustable rate mortgages. Now with their zero interest rate policy, those mortgages are pegged to a rate and have now gone into negative territory, which means in some cases banks are now paying customers money for holding that mortgage. That's not going to work. And of course, these are going into courts. You're going to see a lot of legal challenges. But a contract's a contract. They didn't write into these contracts before any provisions about interest rates going below zero. So, that puts the ECB in a tough bind. as far as how low or how much lower they can go on rates. So interesting, and again, just helps, in my opinion, formulate a case of why the dollar is not going to continue to parabolically shoot up against the euro indefinitely, and that trend may be closer to an end than a lot think. So enough being said on that. Just take a look at the article when you get a chance. Okay, this is a US dollar, Japanese yen. That's not the time frame I wanted to talk about. Let's see if I have my notes. There it is. Okay. This is a chart I put up in the past before. This is the dollar against the yen. So basically, what we've seen is the dollar has been rising against the yen. I have this yellow. This chart has been posted in static form, not recently, but in the last few weeks. Yen came up against this, or the US dollar yen pair, I should say, came up against this double top resistance. We had this nice uptrend line here, the yellow uptrend line. We had a breakdown of that. When that double top high was put in, we had negative divergence here, as pointed out. And so it looks to me as if there's more downside to come in the yen against the dollar. That would be my first target, this horizontal line here, and ultimately this second target would be down here, a longer term swing target, but I don't expect us to go straight there. GDX, I've talked about quite a bit about this in static posts and commentary recently, static charts on the site, so I won't say too much more. This to me is pretty important. This is a nice clean symmetrical triangle pattern. We did have this one false breakdown bear trap, but the fact that we did regain that and had some impulsive price action, overall that's bullish. Hard to make too much of the gold stocks until that we see a definitive resolution of this pattern, meaning either a solid upside break or downside break. I still continue to favor an upside break. So we have resistance levels. R1 on these charts just mean resistance. You can use those as price targets, whatever. But gold and the gold mining stocks have been along since, gosh, I'm trying to remember. It's a few weeks back now, I think down here possibly. And I remain bullish on that, especially in light of my comments on the US dollar and equities as well. Equities down equals a flight to safety, and you might see gold and the gold mining stocks catch a bid. Okay, this is USO. It's one of the more popular liquid ETFs that track West Texas Intermediate crude and various other crude related products. OIL is, I believe, tracks only West Texas Intermediate crude, if I'm not mistaken, and USO has heating oil and other things. But long story short, they're going to mirror each other. And again, I use this chart a lot because of liquidity. If I post a lot of charts on WTIC, most traders aren't trading that. Maybe there's a few of you guys that use futures, but the majority, like these ETFs, are liquid. They're in and out. They're clean. So this is USO. Again, for those of you who followed the site, I made what I felt to be a very compelling case that the bottom was we were very close to a bottom, and I made that post back here in my opinion, we had just reached a crescendo of bearish cries of why oil prices are going to continue to fall lower, and low oil is going to be here for years to come, blah blah blah. And at that point, I've been trading long enough. It's just like seeing a top, a manic top in reverse. So what we did from that point, we had of course, those of you who follow the site, some very lucrative quick trades on energy stocks. I used some select energy stocks, and we got out right here near the top. I haven't commented much on oil lately. I've been following it. We put in a new, slightly lower low, very bullish chart action. I mean, this to me is most likely a multi-year bottom in crude oil. So far, we have two lows. Now, did we go down? Is it possible to see a third low or maybe a triple bottom, where we come down roughly here, maybe an inverse head and shoulders pattern with this being a left shoulder ahead? Yeah, that's very possible. We are right now at the top of what I have drawn here is a bearish rising wedge pattern. This is just a minor sub downtrend line, but this is what I'm looking at in crude right now. A nice, clean, bullish falling wedge pattern, I should say. Multiple tags here, multiple tags up top, strong divergences in just about every indicator and oscillator that I look at. So an upside break would be bullish. This would be the first upside target here. Roughly, I haven't set this as an official target, call it 2030. And then we have a big thin zone on USO. Now, I don't expect this to be filled overnight, but in the next, over the coming year or so, I could easily see USO coming up to that 2660 level. And but in the near term, just looking at this wedge, I'm probably 50-50 whether prices need another thrust down. I can tell you this, no reason if you're not already long and you haven't been long crude, no reason to go long while at resistance. It's really contrary to trading. You know, the risk reward is very unfavorable because if we have a reaction or a pullback off this wedge, then you enter there. So you can either wait a few points and then prices break above support. Ideally, you want to see a daily close above that trend line because this is a daily chart. Or you can go long on a pullback within the wedge in anticipation of a breakout. So again, there's a couple. There's actually several oil stocks on the site right now as active trades. And let me continue on and just move forward and wrap this video up with a few trade ideas, and then I got to get back to trading here. This is an ETF that I've actually been following for a few weeks now. I actually own it, and some of the trade ideas that are actually longs on the site are components of this ETF. There's, is that, who is it, Kramer? Somebody always says there's always a bull market somewhere. And that's true. U.S. equities, I'm clearly bearish on, and at least in the near term, maybe a longer term out. But right now, I do think this is a very attractive looking chart. It's a very bullish pattern here, clear bullish falling wedge on the daily chart on this ETF. Let me explain real quick. It holds stocks from companies in Chile, Colombia, and Peru. So you're getting exposure to those three South American countries. Bullish rising wedge pattern. Prices came down for a near back test. I may add this on as an individual trade idea, a long-term trade idea, very soon here. I don't know. Might see some sympathy selling, if I'm correct on the U.S. markets, and we're going to see a continued, pretty sharp sell-off in the coming days or weeks here. That's likely to bleed into other markets around the world. So I want to show this. If you want to start scaling in, great. If you want to take a back test on this, an entry on a back test of this trend line, if we get it, great. If not, these are my near-term targets. Look about 920 and 950-ish. I think this one has a good shot of hitting over the next 6+ months. EC. Ectopetrol, I believe that is a component of AND, and this is an active trade idea on the site. Similar pattern, obviously, bullish falling wedge pattern, strong bullish divergences in place. Stock that's fallen in the last 2 years from the low 40s all the way down to $13. And so we had a breakout here. You can see that on the original breakout right there was an impulsive move up. If I can get that candlestick right there, you zoom in, you can see it. And prices are drifting a little lower, flagging action most likely. Again, if the U.S. markets experience a strong sell-off, I wouldn't be surprised. In fact, I'd be surprised if we didn't see some sympathy selling in a lot of the other long trade ideas on the site. But with that being said, this is a long-term trade idea, and I believe there's another chart, a live link. If you go to the site on stock charts, it'll show you the actual price targets, which these are some of the targets right here. Let's take a look at BCH. I don't believe I've added this one on yet. I'm just watching another component of that ETF, Banco de Chile. This one is a bullish falling wedge pattern, positive bullish divergences in place. This line here represents horizontal resistance around 70.90, a little higher. We had a reaction high. So what I'll probably do is, I think the time is right, this will go on as an active trade idea and either be a break above that orange trend line or the recent highs that we hit the other day. Looks like 70.91, somewhere like that. You want to wait till both this downtrend line and this horizontal resistance level Because what you're looking at here is this nice base. If you just look at the reaction back here, reaction here, then prices broke below there, and we've been basing. And this is just, to me, looks like a stock waiting to break out, but we're not there yet. You can take a long here. It's not very objective because you're buying right under support. I'm sorry, right under dual resistance levels. And this thing may take a few more months to base out. So just one that I'm watching for now. Just want to share that with you guys. And if and when I think the time is right, that'll be an official trade idea on the site. CCU, this is already was an official trade idea. Again, another component AND. As I said, I've been watching that one for a while, and that's why I dug down in there and looked at some of the more attractive looking components. There's a better chart. If you view the site, go to the trade ideas, long trade ideas, and there'll be a link to the chart that I made on stock charts, a live link. We recently hit this third price target. I book profits there. I plan to recycle back into there, but it's had a near vertical run since the breakout. We've done very well on this one, and this is my longer term swing target up here, which I will most likely reposition when I think the time is right into this one. But longer term traders, expect a little pullback when you see a run like this. Set your stops accordingly. You don't want to. That might be an ideal stop, not too far below the 2150 level. But again, it all depends on your entry price and your own trading style. So a little more meat left on the bone on that one after, works off these overbought conditions. ICA, this is one that I believe it may be in the AND ETF as well. I own this one. Was going to put it on as a trade idea yesterday, with a break over this line. We've broken out. We're kind of running up sharply. I have my concerns. I didn't put it on because I have this R1 level here. As I'm talking and doing this video, I've just noticed now today we're up almost 3%. I'm probably going to add to that position as soon as I wrap this video up. May add a little bit. I took a starter position after the breakout, but that it looks clear once this R1 level is clearly in the rearview mirror, especially if we don't have any sympathy selling on this one. If the U.S. markets continue to pull back, this one has the ability to run, and that's about just shy of the 450 level, my first target. And second target is, the resistance is at $6, so my target would naturally be set a little bit below that. So, we're talking, from a move from 380 all the way up to $6. That's a considerable run, and I do think that stock has some potential. So as you can see, there's obviously, a lot of the bullish trade ideas are in South America right now, the ones that I'm liking. PWE was added recently as a long trade idea. This is actually Canadian oil stock. So this one had a similar pattern, bullish falling wedge pattern, pays a nice dividend. I don't know if that dividend may have been cut from that point, the 10.6. I think they've actually reduced the dividend to just over 1% or so, if I'm not mistaken. So I added this as not a growth and income trade idea, just a regular trade idea, but that one still looks to have room to run. And again, check the site. These are not the official targets. All right, that's a few trade ideas. This video has gone to about my threshold here at the 30-minute mark, so hope you enjoyed. This has been Randy Finney with Right Side of the Chart. Have a good day.